Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
ICE Brent crude oil futures. A bullish closing white Mariposa and possible hanging man pattern yesterday, as well as a second bullish white soldier after the previous session's indecisive spinning top pattern. The market is back up, testing the base of the somewhat stratified and a layered overhead congestion stretching from 68.69 up to 72.29. Immediate support below comes from the July 21 low at 67.43 and especially from the bright red neckline extension, currently at 66.61, to the March to May 2020 reverse head and shoulders bottom, plus the slowly rising gold long moving average, which is currently at 66.08. However, the most interesting recent pattern has been the breached and repaired December-based bright green bullish Andrews pitchhawk. The market right now in between the bright green lower time below, currently at 67.26, and the bright green middle time above, currently at 69.78. This continuing failure to really push up through the overhead congestion, despite the higher low on Friday we saw, may be telling, especially for target X overhead at 73.25. And that's the target for doubling up of the break above the dark blue May and July 25 to January 26 bear channel. That bear channel is currently 55.69 to 63.86. So far today, a lower opening and a reactionary move back down, though seemingly content to stay above the bright green lower time and looking like an immediate countering bearish double right now. Spot gold. A fifth countering bearish Harami and bearish opening black Mariposa yesterday after the previous session's fourth countering bullish piercing line pattern and bullish closing white Mariposa. So indecision on a larger scale. We're seeing some large ranges, but all seem to be centered around the very recent late January, very early February 50% Fibonacci line at 49.99. Below we have support from an old 50% projected Fibonacci line at 49.14 and the late December 25 to late January 26 true 50% Fibonacci line at 49.31. Whilst topside we have resistance from the 38.2% Fibonacci line of the same move at 50.88. As I said last week about this 38.2% Fibonacci line, and I quote, "This 38.2% Fibonacci line seems to be a significant local resistance, as also cap prices last week," end of quote. The big overall patterns here had been the late January V-top, along with the subsequent bounce up from the 50% Fibonacci line of the late May 25 to late January 26 move at 44.20, which was aided by the October 25 highs in the 43.80 zone. Between these two patterns I drew last week a dark blue late December 25 to early February 26 bullish Andrews pitchhawk, which I think might be able to show the potential bullish angle of attack of this market. It is early on, and I may finesse this still to a shallower bullish shift pitchhawk for the same move, but right now we're in between the overhead dark blue middle time above, currently at 5400, and the dark blue lower time below, currently at 47.67. Now so far today, the 50% Fibonacci line at 49.99 is acting as a cap from the open for a drop down to the 61.8% Fibonacci line for the same late January to very early February move at 48.58, before a recovery up to the 50% projected Fibonacci line at 49.14 and the 50% Fibonacci line of 31st of December last year to the 29th of January this year move at 49.31. Bitcoin. An indecisive doji cross yesterday after the previous session's immediate countering key reversal down and bearish engulfing pattern. The market continues to seemingly be taking stock on what has been achieved and what is still lying open. In the immediate past, we have reached both the primary and secondary targets for the January lopsided head and shoulders pattern. This was part of the break lower from the failed bullish cup with handle from December last year to January this year. This eventually ended up as a very large bearish October 2025 to date, bearish halfway hesitation. All these moves lower tied in with this big, possibly as far back as October last year, big bearish halfway hesitation. We have already reached a number of targets below for this pattern, and that's of a primary target down at the 70 to 100 zone, as well as a harder to reach secondary target down in the 64,000 zone. This leaves us with the much harder to reach tertiary target X2 down in the 54,000 zone. The dip 2 weeks ago below the 50% absolute Fibonacci line at 63,129 helped reach these targets below the previous two targets, as did the same dip and also the one last week below the bright red neckline extension to the August 21 to January 22 head and shoulders top, and that's currently at 67,392. But prices have not as yet stabilized down there, instead somewhat stretching up to the 50% Fibonacci line of November 22 to January 25 head and shoulders top at 17,929. However, we now have to consider the potential showrunner of this move lower, and that's the bright green early October 25 to mid-January 26 bearish Andrews pitchfork, with the market today in between the overhead bright green upper time, currently at 80,837, and the bright green middle time below, currently at 58,408. I am, of course, prepared to finesse this bearish Andrews pitchfork into a shallower bearish shift pitchfork for the same move, should this be required. Now, so far today, a small attempt lower towards the bright red neckline extension, but not an aggressive move as yet.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.